Welcome back to the channel for another installment of our indicator series. I'm Crypto Trend Trader, and today we're going to be looking at the TJD TDMACD. But before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please trade at your own risk. Alright, so today we're going to be looking at the TJD TDMACD on TradingView, and what that stands for is it's the Trader's Dynamic Moving Average Convergence Divergence. And I know it sounds complicated, but essentially all it's doing is telling you are the different moving averages that it takes into account moving further away from each other, implying that we're in a strong trend that's becoming stronger, or are they coming back together or converging, which would imply that the trend is weakening in the direction and we're likely to see a reversal at some point in time. So now we're going to just kind of take a look down here. And what we're looking for on this, there's a lot of ways you can look at it, but it basically simplifies it. You have the histogram, which is essentially just going to tell you where you are relative to your 0 point. And then it's red, obviously, if we're going down. It's green if we're going up. And then the line itself right here, that's the moving average. But instead of having two lines like you would on a normal MACD, it just has a single line, and then it's coded so that it actually changes color when the slope changes color. So there's a lot of different ways you can trade this. It's obviously up to you. The way I trade it is, I'm going to tell you, I'll look for essentially a sell-off, a strong sell-off if I'm looking to enter a long position. I'm looking for a strong sell-off, I'm looking for a peak, and then I'm looking for the bars to start turning green. And I need this to be, if we're in a downtrend, I'm looking for this to be below the 0 line. If we're in an uptrend, I'm looking for it to be above the 0 line, and that's like the initial criteria. So once I get this flash right here, and you'll see it happen sometimes, but these aren't like you're not getting the sharp point. You want to see like a sharp point, and then before you enter. So what you're going to do is you see this green right here, and you could potentially start entering a position when you get like 3 of these in a row, or that's what I do anyway. You start getting 3 of these in a row, you might enter a smaller position, and then once this line crosses above the red line, you can enter more on that position. And then once this is the most conservative way to trade it, but the third entry should be the largest entry, and what that is I'll wait for this to be green. This has to have a green slope, which means it's going upward. It has to have the green histogram bars as well, and it has to be above this line. And then also what I'm looking for the trigger is when this line turns blue. So when that line turns blue, this is green above it, it normally signals a long trending trade. So here's a specific example we can go to right here. As soon as the top line, the histogram line, is green, it's above this line. Once this turns blue, you're going to enter that trade, and you can take it up here, and then you're not actually, there's 2 ways you can use it as an exit. If you're just using this indicator, you can exit once you start seeing like multiples of these red bars in a row, or I just like to use a trailing stop. So if it's not pulling back heavily, I'm not going to get taken out of the trade, because you don't want to have to wait and then re-enter the trade, because a lot of times you'll miss like a big chunk of it. So you might want to take some profits along the way, but I like to leave some on the trade with just a trailing stop loss, and don't keep it too tight, because this is a great move. And as you'll see here, we would have took our entry right here, and then this would have had us going all the way up here, and then you can exit out of this multiple ways. You can exit when you see multiple histograms, but what I like to do is when this line crosses, when the histogram line is red and crosses back below the blue line, because a lot of times what will happen is it'll come back to it and then bounce and will continue up. When it comes down and goes under it, before that slope actually changes, this is going to tell you, okay, it's time to get out of the trade. So you're looking for an exit right up in here. If you would have waited and you wait until this turns red, you can get out here. It's still not a bad exit either way, but you could also use it the opposite way to enter a short. So if this is red and below this, you're waiting for this to turn red, the slope line, and when it turns red, you would enter your short. I would enter my short anyway. That's not financial advice. Take it all the way down here, and then you'll see when it starts turning green again, you could either exit your position there, or once this is green and crosses back over the red, you could exit your position there. But this is a very conservative trading strategy, and as you'll see, it works phenomenally. It doesn't get you, depending what time frame you're on, it's the longer the time frame, the less trades it's going to put you in, but it tends to put you in trending trades, and it has an extremely high success rate. So what you'll see is right here, this is an example of when you wouldn't necessarily trade. The first signal would be here, you're green, you're moving upward, you're getting a sharp point. A lot of times you can look at where it's getting a bounce to see if there's confluence in other areas you would find a bounce. So it starts coming here, you might enter a small trade there. You start going up. Once the green histogram crosses over the slope line and then turns it blue right here, you would enter your trade. That's where your big trade goes in. You're going to ride this up, which we did. We crushed it on this. And then you can basically either continue to ride it and just keep trailing up your stop loss as you go based on support along the way, or use another indicator to get out. I like to use multiple indicators together to give myself like the highest probability of success, especially when I have like 2 or 3 that I specifically use together in my trading system, so that I have a very high hit rate on those specific flashes. So, and I'm going to just switch here real quick to the daily time frame and just kind of show. This is a perfect example of when you would have took like your initial trade. You could have took right here. Once it starts turning green, especially on a daily time frame, and the slope's curving up here, you'll get green histogram wicks, and then you'll get green on the slope, and then you take an entry. And then also obviously you can use it in confluence with things like resistance and support. We had a downsloping resistance line. As soon as we closed above it and we saw continuation with volume, we knew that was a breakout trade and that was going to be a success. Now, I do want to just talk real quick about this though. You're going to look for similar signatures to give you an idea what to expect, and this right here has me thinking twice, because this was the head and shoulders that we played to the downside that played out very well. And you'll notice here the same signature. We got the blue, we were up on top, we got a strong move up, we hit a key resistance or fib level, and then we got a strong sell-off and we lost the slope. So when you're consolidating for a long period of time and you get a move like this, the slope will change back and forth much more rapidly than if you're in a strong trending move, because it's going back and forth between being positive and negative so much. You can get false signals, so you have to be careful, because you can get a signature like this and you could potentially have a situation just like this happen, where it comes up, you get a strong move up, and then you get a violent dump and you give up the entire rally. Get a strong move up, violent dump, give up the entire rally. So I'm not saying that this is guaranteed to happen right now, but it looks like what we did was we got a strong move up, hit the resistance, and if we start seeing a similar signature flash, we know this rally is going to get faded and we can expect further downside. If we continue to see strengthening to the upside and continue to see the volume coming in and everything, we'll just stay in this trade all the way up until we get to a key confluence zone between the Fibonacci's and also our resistance, or the top of the triangle that we've been in here. So that's the basics of it. That's essentially how, there's lots of different ways you can trade it. There's lots of different ways you can use it. It's a very good tool because it does get you into strong moves and get you into, up or down, get you in and out, but it works best if you're using it with something else. But I find it much more visually appealing than the typical MACD. It's much easier to look at. You glance right at it, you see the blue line, you see the green, you know it's a good move up. You see the red line, you see the red on the histogram, you know it's likely to continue down. So there we have it. That's the TJD TDMACD, and that's the Trader's Dynamic Moving Average Convergence Divergence. And I'm Crypto Trend Trader. Appreciate you coming back for another edition of our indicator series, and we'll be posting up daily, so please come back and check us out again. Crypto Trend Trader signing off.